Good Monday morning for March 3rd, 2025. Hi, I'm Zack Howard. Welcome to your 3-minute Monday morning market update. What's in my notebook today, what I'm looking at. We got the GAG, the Golden Age of Grift, officially going here last night with the Sunday night pump of Bitcoin and the digital asset space via the Trump administration announcing a strategic reserve, not just Bitcoin, a bunch of the altcoins in this reserve. These asset classes the most volatile in human history of any other asset, and we are seeing it with a big bounce over the weekend and into the start of the week. Can it be maintained is the question, because it is still in a bearish trend, and assets usually bounce the most when they are in a bearish market. We'll see what happens. Further to that, overnight we had a bounce in Asia, with Japan up big time after sell-offs last week. South Korea closed, China really did nothing, India not very doing much either. On to Europe, big bounces we're seeing in Turkish equities, believe it or not. Japan or Germany's up here big time today to start March, as they have announced a big increase in defense spending possibly for its country, i.e. more debasement of the euro currency ahead for the Europeans to support this backdrop of continuous defense spending wars. Commodities trying to make up its mind what they want to do in terms of the macro backdrop. We have platinum, silver, and palladium joining its big brother gold into new higher lows, higher highs in bullish trend. Kind of consider commodities such as copper or silver, palladium, platinum alongside its neighbor in the industrial space, copper, which continues to try to decide where the macro regime is going, with natural gas and copper bouncing to start the week. But if we look at U.S. bond yields, further evidence there of lower lows, lower highs, i.e. bullish bonds, pointing probably to more favorable disinflationary biases for the end of Q1 into Q2. That's what I'm looking at in my notebook, is lower lows, lower highs in those U.S. bond yields, along with the commodities backdrop. Still a lot of uncertainty in this Goldilocks environment for now. U.S. equity volatility continues to be elevated. We have now a change in trend from volatility moving from bearish to bullish, with that crazy activity to end February last week. The volatility reading on S&P 500 in my notebook is around 14 to 23 here to start the week, and we're still in this negative gamma environment. In that environment, there's market moves to upside and the downside happen way faster, and that's what we're continuing to see possibly here this week, especially after the backdrop of Nvidia not really doing much. They rallied the end of the month post earnings last week, but Nvidia still hasn't maintained that bullish trend, and it's going to be challenged for the overall market to continue to make all-time highs without those Mega 7 names continuing to show higher momentum, which they have now lost. In the backdrop of all that, thoughts from my notebook over the weekend, how we are here in markets in 2025. We got the flows in markets, we got the volatility, and we got the fundamentals. The flows probably represent somewhere between 50 and 60%. The volatility regime currently, and where we're going, 25 to 30. And at the end of the day, old school fundamentals of the stock only represent somewhere between 10 and 15% of daily price action. That's just my take. Hope you have a great week.